Let's take a look at how the SBRA works in a situation of a hypothetical California restaurant owner with the following financial circumstances. In this video, we do cover a lot of financial data quickly. Don't worry about taking notes. The full text of this presentation can also be reviewed in the written blog section of the website. All right, the owner owns a home. There are two mortgages against it. The first mortgage of $300,000 and a second mortgage of $200,000. The second mortgage has a 15-year loan. The home is worth $400,000. The entire $200,000 loan was put into the business. The restaurant has a contract to purchase equipment. Original contract $150,000, 84 months at 12%, 105,848 owed with 57 months left on the contract, but the equipment is only worth $20,000. 5 years ago, owner entered into a 10-year lease at $2 per square foot. The space is currently renting for $4 per square foot. Because of the COVID shutdown, owner is 6 months behind on his $5,000 a month rent. Okay, the restaurant also leases some furniture which is in marginal condition. The owner also received an emergency SBA loan of $150,000 6 months ago. 45 days ago, owner paid Discover credit card $75,000 on a pre-existing credit card debt. 100 days ago, owner repaid his brother $50,000, but then borrowed from brother again $40,000. Owner has $100,000 in other credit card debt. Let's take a look at the owner's monthly payments. All right, the monthly payment on the first mortgage is $1,800. The monthly payment on the second mortgage is $1,688. Let's take a look at the equipment purchase contract. Monthly payment $2,933. Interest rate 12%. Current balance $105,848. 57 months remaining on the contract. Equipment value $20,000. The space rent is $5,000 a month. That's a lease. The furniture is also leased, $750 a month. The SBA loan monthly payment is $1,266 a month, and the credit cards are $1,501 a month, 15% interest. Current balance $100,000. Remaining months 144. The total monthly payments come out to $14,938. Total debt is $855,848 plus $30,000 in past due rent and $75,000 it will once again be owed to Discover, since Discover will have to disgorge the payment it received as an avoidable preferential payment. The total debt is $960,848. Okay, now let's apply the rules under the SBRA. Remember, these are rules, not wishes or starting point for negotiations. All right, the owner's new monthly payments. Let's break these down one by one. Let's start with the home loans. Because the house is worth less than the combined value of both loans, the second mortgage can be bifurcated into secured and unsecured portions. $100,000 of the second mortgage is secured, $100,000 is unsecured. Because the loan was used entirely for the business, the SBRA says that the terms of the loan can be modified. So we would propose modifying the loan as follows. The unsecured portion of the second mortgage, $100,000, would be relegated to the pool of creditors that includes the SBA loan of $150,000 and the credit cards of $100,000. The total unsecured debt then equals $350,000. For purposes of this hypothetical case study, assume that these unsecured creditors only received $75,000 through the plan. We would propose modifying the $100,000 portion that is still secured as follows. Extend the payment term to 30 years and reduce the interest rate to 3%. Now let's take a look at the monthly payments. All right, the old monthly payment on the first and second combined before the reorganization was $3,488. The new monthly payment is $2,222 on the first and the second, for a monthly savings of $1,266. Now let's look at the total debt against the house. The original total debt was $500,000. The new amount owed would only be $400,000. The amount of debt reduction would be $100,000 minus this debt's share of the pool of money for unsecured creditors, 17,647, for a total debt reduction of $82,352. Equipment purchase contract under the SBRA, amount owed on secured debt is reduced to the value of the equipment, interest rate at 6%, and the payment term can be extended. Applying these rules, let's take a look at those monthly payments. All right. The old monthly payment on the full contract, $2,933. The new monthly payment, $388. 60 months, $20,000 owed. All right, so we've got a monthly savings on the equipment contract of $2,545. We also have debt reduction, significant debt reduction on the equipment purchase. The original debt, $105,848. The new amount, $20,000, which means that the amount of debt reduced is $85,848 of debt. And this isn't reduced, it's wiped out. All right, let's talk about the space lease. Under the SBRA, the owner can choose to assume and assign, or reject the lease. Although the owner could sell the lease, the owner wants to stay in the present location. Owner elects to assume the lease. Immediately after filing the SBRA action, a motion is filed asking the court to do three things: defer rent for 60 days, have the deferred rent of $10,000 treated as an administrative expense paid over 5 years, and have the 6 months of past due rent due to COVID forgiven on the grounds of force majeure, impossibility of performance, and frustration of purpose. The court grants all of these requests. Let's take a look at the monthly payment change. Monthly payment originally $5,000. Principal reduction, the $30,000 of past due rent forgiven after bankruptcy court judge applies state law and finds that since the restaurant owner could not generate income due to the pandemic and governmental shutdown orders, payment of rent is excused for those 6 months. All right, now let's take a look at the furniture lease. Owner elects to reject this lease. No further amounts owed, but the owner would have to return the furniture. Old monthly payment, $750. New monthly payment is $0. For a savings there on the monthly payment side of $750. Let's look at the credit cards. Unsecured portion of the home loan and the SBA loan. Unsecured creditors, all they will share pro rata in the $75,000 that Discover pays back, since the payment to Discover was not only a preference, it was also an avoidable preference. All right, so the original monthly payments on the unsecured debt, let's take a look at those. Credit cards, $1,501. The SBA loan, $1,266. Payment attributed to $100,000 bifurcated second mortgage, $844. Total, $3,611. Let's take a look at the new payment through the reorganization plan, $625. Plan calls for payment of the $75,000 over 10 years. All right, so the total monthly savings there, $2,986. Original debt, $350,000. Add in the $75,000 increase to the amount owed to Discover Credit after they disgorge the preferential payment for a total of $425,000. Amount paid to all unsecured creditors, $75,000. Total debt savings, principal reduction, $350,000. Next, let's look at the preferential payments. The payment to Discover of $75,000 was a preference. It was a lump sum payment on a pre-existing debt. No new value was received. The payment was not in the ordinary course of business. No other defense applies. Discover will be required to disgorge this money. This will be the pool of money from which the unsecured creditors are paid pro rata. Now let's take a look at the payment to Brother. It was also a preferential payment. However, since client reborrowed $40,000, that money would be considered new value, reducing the preferential payment to $10,000. The costs of litigating to get the $10,000 back exceeds the benefit. Decision made not to seek recovery of the $10,000. In sum, then, the reorganization plan would result in the following savings. Let's first take a look at principal reduction. Home loan principal reduction, $82,352. Equipment loan principal reduction, $85,848. Unsecured debt principal reduction, $350,000. Rent forgiveness, $30,000. All right, so adding those all up, the total principal reduction is $548,200. Monthly payment reduction. Let's look at that. Monthly payment before reorganization under the SBRA, $14,938. Monthly payment after reorganization, $8,235. Monthly savings, $6,703. All right, imagine the restaurant owner's personal income from the business and their net equity when the debt payments and amounts remain the same and restaurant income goes back up in the future. All right, to find out more about the other powerful tools available under the SBRA to protect a business that you enjoy and a way of life that you have worked hard to achieve, sign up to attend one of our webinars or call to schedule an appointment to discuss the particulars of your case. The initial consultation, up to 1 hour, is at no charge. The webinars are free and include a 20-minute question and answer session at the end. We would also refer you to the blog and video blog sections of our website for discussions on other topics and points of interest, including case studies where we apply the individual principles covered in the building block videos to real life fact patterns. We look forward to hearing from you.